Look, if you're stuck watching public REITs thinking that's the best way to play real estate, it's time for some tough truth. Those things are the beaten path, but beaten down they are, by fees, volatility, and a herd that chases the same scraps. You want real control? Real returns? Then the public market isn't your playground. It's a trap. You're handing over your power, your upside, to fund managers and stock market chaos, and getting a diluted, watered-down version of what real estate investing can actually be. Private real estate holdings are where the real game happens, but not everyone has the guts, the insight, or the connections to crack that code. The frustration, the sense that you're missing out on a better way, that's real. You see your portfolio stuck with mediocre yields, and you wonder why. The pain of knowing you could be making more, but feeling locked out, that's a real gnawing wound. Here's what you need to realize. Public REITs are layers of middlemen, liquidity demands, quarterly earnings reports, and market swings that make your capital hostage to the daily whims of strangers. When the market gets jittery, your asset loses value even if the building itself hasn't changed. It's madness to expect consistent, superior returns in a system built to serve the trader's psychology, not the real owner's growth. Private real estate skips all that noise. It's you and your team owning real, tangible assets, tailored deals, locked in for years to build actual value. Remember, this is a long game. Passion and patience crush quick flips every time. You engage directly, you negotiate, you improve, you reposition, you control the financing. No quarter-hour panic. No forced selling. No market emotions dictating your returns. But here's the kicker that most miss. It's not just about private versus public. It's about building the right structure around your holdings. Family offices and founders, you need a tight, disciplined approach that blends operational control with access to exclusive deals. You don't get better returns by just buying private assets blindly. You get them by aggressively managing, optimizing cash flow, and engineering exits on your timeline. The deals that outperform aren't public because they're bespoke, illiquid, and require deep relationships, not ticker symbols. If you're serious, start by ditching the idea that you can get good enough returns from public markets and start building teams that can source off-market deals, run due diligence that cuts through hype, and execute active asset management that forces upside. Stop chasing liquidity and embrace patient, confident ownership. The difference defines legacies. Also, demand transparency in your private partnerships. The best private holdings hit you with brutal honesty, no gloss, no spin, because that's how you spot hidden risks and hidden gems that move the needle. Trust is earned, not assumed. Weak managers hide problems. Strong ones run toward them and fix what's broken. And stop underestimating the power of scale and structure inside private holdings. Leverage isn't evil, it's a tool. When used right, it amplifies returns without blowing up your stack. But you can't wing it with leverage. You plan for downturns, you hold reserves, you stress test everything. Because shoddy discipline kills more portfolios than bad markets. You feel this tension every day, between what you see in conventional channels and what your gut screams should be possible. That tension is the doorway. Step through it by building a network that opens doors few can enter. Work alongside investors, founders, strategists who get the real game. Private real estate is about relentless focus, control, and the courage to do what public markets won't let you do. The result? Returns that aren't in the headlines but are in your statements. Real growth, real wealth, real legacy. This isn't about following the herd or clicking through apps. It's about owning your future and doing the hard, precise work private real estate demands. Get off the hamster wheel of public REITs. Build the muscle. back the right teams, structure your ownership, cut the fat, maximize cash flow, and double down on patience with sharp eyes and steady hands. That's how private real estate holdings leave public REITs in the dust. No hype, no fluff, just results. Subscribe to our YouTube channel and open the featured link to learn more.